Good morning. Welcome back to the video. As what we have covered last week, I mentioned that when you see a signal, you have to look for follow-through buying. Then it is very important to take note of that, because with the follow-through buying, that increases your chance of success. And today I am going to talk about after you see follow-through buying and you have taken action, what is the next course of action. Further observation is needed, so let's start with stocks that I have highlighted earlier. So along the way, I highlighted a lot of stocks, and some had some follow-through buying, some doesn't have. Like for example, MagTech. Okay, so MagTech over here, just an example, a quick analysis. You can see that this counter had a strong rebound over here, and this strong rebound, like I mentioned yesterday, or not yesterday, last week, the follow-through buying wasn't there yet. So you can see that there isn't any selling, although that the stocks didn't go up. There isn't any strong selling until the day here, where it came back to retest this support level. So when you come back down to retest support level, especially after a short rebound, it's not a very good one, because the short rebounds and then follow through selling after that, or covering the rebound over here, it doesn't show any strong bullish sign on the counter. So you can see that it attempt to break support and trying to hold up the level before anything would happen again. So this kind of chart now has been discounted, and therefore we should discard looking for opportunity now, but rather we should be focusing on other chart. Now a lot of other counters also face the same situation, like Singtel, where you can see that when it was highlighted, it was at multiple confluence of support. So what is confluence of support? We see that this counter landing at or resting at a level where, or a zone of levels, a zonal levels, where we see it held up very well, meaning to say the price don't drop in layman term. So you can see 253 for Singtel was a 200-day MA support. Then at this point it was above 20-day MA, and then of course we see that the stocks generally was still up. Of course, follow through buying is important, and looking at Singtel, see the importance of follow through buying over here. Let's switch to the, will help you to save a lot of trouble, unnecessary trouble, by holding stocks that is going down. So you can see the next day there isn't any follow through buying, especially it opened, traded a little bit higher in the morning, but then towards the end starts to close lower. So close back to 253 support. So at this point, if you are trading, you shouldn't be buying it, you should be waiting. And the next day breaks its support right away. Okay, after an initial sign of rebound, it actually give way and go back down to hit this support level. So this support level is about 244, and right now it managed to hold at that level and rebounded towards 253, which is going to be a resistance, because this was a previous support now turned as resistance, and now it has been struggling at that level. So it is very important for Singtel to break above 253. If not, it cannot even move back into its uptrend. Especially if you look at the bigger picture, now the uptrend already been broken. Okay, so moving back into uptrend really takes some action, some decisive action, where the stocks actually move back above 253, start to develop the higher high, higher low concept, which what you see here. So you can see this low, the higher low. So here it can be the first base low. If it's going for uptrend, then we are looking at it to cross out above 253 and even touch 260 region, and then pull back, right? Undershoot means it doesn't retest this support level, and then rebound back up higher to break out above resistance. Then the new uptrend will start to form. If it doesn't break out above 261, then at most it can go for a big sideway pending for some downward action. So if you look at stocks, when it moves in terms of sideway, it actually increases the chances to go up or go down along the way. So how do you see that? Now basically when you see a stocks moving in sideway, coming to test support level is not a good sign. Okay, so especially like this period of time, example, you see Singtel managed to have a very strong support level, major support level at 214, touch, right, and then rebound, undershoot. This undershoot where it doesn't come back to 214. Okay, this undershoot level, and then rebound back to hit resistance. Okay, this is the first good sign, but unfortunately it didn't manage to break out and come back down to hit the same support level, and this time round it doesn't undershoot. It actually touched the level, rebound, and you can see it doesn't last long after that, and then goes down further. So especially in a sideway, coming back down to test support level increases the chance of going down further, because it makes the support, although a strong one, vulnerable. Okay, so it's very important to see that this observation, or remember this observation, so that going forward, if you're holding any stocks for short term, you got to watch, because if you cannot afford to hold this counter, probably it will be a wiser choice to exit than look back after everything is calmer and clearer. Okay, Singtel doesn't look very good now, except that if it can hit 253 and break out from there. Then we have SETS, Yangzijiang Venture. Remember last week we talked about Venture, iFast, DBS and Capital Corp. So I'm going to go through all these counters right now. SETS, first off, in the email itself, when I was covering SETS, it was consolidating for a short-term price pattern over here. So you can see the high volume, and then it declined as it pulled back with lower volume. So this kind of short-term price pattern typically signifies a potential explosive run going forward if it can break out successfully. So when I say if it can break out successfully, means that there is a very strong follow through buying. So the next day it doesn't have any breakout yet, but the consolidation and the flag pattern remains very much intact as the volume remains low. Okay, so we have to wait patiently for that breakout to happen. So it didn't break out, in fact it broke down. So many ask me this question that, hey, is the result going to be bad? How come it breaks down? Yes, this is the first clue that the result is going to be bad. And then after the result is out, you can see it actually sold off viciously, right down to this support level at 254, and is seemingly breaking it. So you can see a huge two top over here, and if the sell-off continue, I won't be surprised that these sets would continue lower towards this support level at 238. Okay, so no doubt that their revenue has gone up, but because they book a one-time charge because of the takeover of the new entity in Europe, then therefore it turned to be losses for SETS, and of course their cost has increased tremendously, so they have to work in this area where they can contain the cost and then keep their revenue growing as air travels increases. So going forward, you have to wait for this selling to be done, then look into this counter, because going forward I think it should be doing well, because air traveling is crazy right now. The demand is so high and SIA has been going up. So you should wait patiently for that technical signals to come before you take any action. Then Yangzijiang and Venture. So Yangzijiang, you can see there's no follow through buying over here at this level. Okay, so why do I say that? Because in my email I was looking for a follow through buying, okay, higher above 1272 to test 131. Okay, so we should look for Yangzijiang to move that in that kind of direction before we can take action. Like for example, it was trading at 124, and people are asking me, hey, what do you think about Yangzijiang? I was saying that you must clear 127, follow through buying, then we can look at it. But so far no. You can see Yangzijiang is going down, testing a support level at 123. It doesn't mean that Yangzijiang is bad right now. It's just that it has no follow through buying. Currently it's forming a hammer pattern where you can see the lower shadow is significantly longer than the body. If we maintain like this, especially at this support level at 123, then we can see a chance for it to rebound next week back to 127, break up from 127, then 131. Okay, so let's see whether it can close at 123 and above. The best is if we can close at 125 lah, then we can start to look for entry at 126, 127 level, and then looking for it to continue to move higher. Venture, there's a potential higher low over here. As I mentioned last week, that Venture must cross above 1541 in order to be bullish, and it did that. After the video, the next day it actually rebounded strongly, hitting 1541, and thereafter, the day after it actually gapped up, breaking above 1540 resistance. But towards the end of the day, it actually sold off to close lower. So this is one thing that you need to take note, that if a counter open up higher, okay, open up higher and close lower, forming a long black candle, this is not a bullish sign. In fact, this is a very bearish sign. This tells you that underlying market is still selling. They see the opportunity to get out Venture at a higher price, so they quickly sell off, and then eventually pushing it lower. So case in point is that it happens many times in Hang Seng. Okay, and I was looking at Hang Seng. So I was covering Hang Seng every day, and here this was a time where I mentioned about Hang Seng. If you are looking at the screen now, we are looking at, see the long bearish candle indicates weakness. So here you can see it opened higher, Hang Seng opened higher, and then closed lower, and this was a sign to signal for further downward movement. And it is no surprise that Hang Seng crashed after that, and now it's trying to search out a bottom, and this happened to Venture right now. So very importantly, you can see that the support level is seemingly going to be tested soon, because it's moving towards that direction, and Venture may not be a bottom here unless it can suddenly rebound back to hit back this 1554 level to what we call kill off this group of seller. Okay, kill off this group of seller over here. Okay, so when you see this kind of candle, okay, and there's a follow through selling, it's not a good sign. But when you see this kind of candle and there's no follow through selling, which means that the next day white candle and even move back up to this higher, then this is a bullish sign. Means that they are ignoring this group of sellers. So there's a lot of observation to be done and a lot of learning lah. So if you are really keen in mastering trading, you got to really put some effort in practice and start to observe this kind of signs to tell you whether the market is going up or down. Okay, now in the face of adversities, okay, like this, where you know, if you are having, why I say that is, if let's say you already entered into venture because you saw the breakout and then you see there's a bullish potential bullishness where you continue go up and you have entered, and then to your surprise it actually goes lower. This happens very frequently, especially in this kind of a tough market condition in the Asian market. Now Hang Seng has been slowing down, STI has been going down. Now, so your choice now is to watch closely at the support level over here. Okay, so this support level represent a lifeline for the counter, so at 1496. So if the counter doesn't break below 1496 and rebounded strongly back to its resistance, then that is your hope. And along the way, take note of the volume, especially if the trading volume on the rebound is higher. This means that the buyer could be coming back in, and then you want to take note again whether it can continue higher to hit 1561. Now if it bounce halfway, let's say you're holding this counter around 1546, and if it bounce halfway, let's say you manage to rebound here halfway back to 1531 and then pull back immediately, then come to 1496, the best course of action is prepare to switch counter, to look for better counters, because this is a bearish sign. As example is here, you can see it bounced halfway. Okay, it was a sell down here, then it bounced halfway, then it break down, then eventually sold off. Okay, so you got to take note of that. So the positive side and the negative side, watch every day, look out for the volume, look out for the candle. If the candle is not a long black for you, the next moving trading few days, then you should be safe. Okay, tomorrow we are holiday for in Singapore. We're going for holiday in Singapore, so there will not be any trading, but US market and Hong Kong market continues. So for those who are watching the US market, the debt ceiling has gone up, and somehow for the past few days people were publishing reports that the debt ceiling has been affecting the Asian market, but I see the Asian market did not react positively when the debt ceiling is raised rather. Okay, so this is another thing we got to take note, is that market may be just looking for reason to sell down. Debt ceiling is just one of the scapegoat, but then the underlying fact is that the market is still not bullish as yet. So you got to keep your position tight. Okay, watch out for different scenario that may happen. Okay, so if you keep a position small and tight, means that anytime things happen, you can just exit and then stand aside and wait for that true moment to come in. Then you can enter the market to see your profit grow higher and higher. Okay, next let's look at iFast, DBS and Keppel Corp. So iFast was highlighted for the 30th of May that we are looking at it to continue higher, to break up from 443 towards the 473 level. Of course it broke out, and look at the volume, very strong. The next day start to get weakened, okay, because you can see although there's some early buying action pushing the counter higher, eventually it still ended lower. So this is not a very good candle, but the thing that we are looking at is that it cannot close below 443. Okay, why do I say that? Not highlighting mentioning about the candle further, because 443 is now resistant turn support, and right now is holding there at testing this level, and it is very important for it to hold to continue its quest to change its trend. Now the candle itself is not really a bearish candle, no doubt. We see it close lower because it's not a long black. It's not a candle that suggests more bearishness as yet. Okay, so we are going to stay focused and watch for 443 and see whether it can continue its journey to change its direction beyond 473 if possible. If possible, we'd like to see IFAS back to 505, breaking its resistance along the way. So let's say if you are holding, you already are taken a position in IFAS at 439, for example. Now it's still okay, so you can still continue hold on because there is no strong selling sign as yet. Okay, DBS. Okay, the points to take note is that DBS keep coming to its support level over here. Okay, so this is a very important sign to watch because, like I mentioned earlier, keep coming back to support level is not a good sign. What we need is it must go back to resistance. So we can see a strong rebound after a sudden sell-off yesterday, and now a good rebound rather. And now we want to see DBS go back to its resistance at about 31.83. Okay, so this forms a bullish harami. If you remember last week's lessons, bullish harami pattern over there, and this is what it must do. It must sustain as a white and then go back to 31.83 in order to stay afloat. Okay, like I say, if it bounce halfway and then come back to test 30 and below, then you can probably see this counter maybe even traded lower to 28.86 to 27.82 if it fail on this rebound. Okay, if fail on this rebound, the case in point is something like this. I just want to show you something like this. You see, particularly after a sell-off, then rebound, white candle, and then no follow through, bounce halfway, then sell off already. Then means that, you know, sellers are still there. So these are the things that you need to watch going forward. Okay, and Kappa Corp has a hammer pattern. Kappa Corp hammer pattern, and Kappa Corp, you can see, like I mentioned last week, the uptrend is changing towards sideways, and you can see a short bounce here. So this short bounce is a sign that the stocks can go downtrend. Okay, if it cannot bounce back to this high. So coming back to the chart here, we can see Kappa Corp now struggling to have a follow through buying for this hammer, and this lower high, right, is a sign for a potential downtrend. It may not be a long-term downtrend, it may be just a short-term correction before it go back to its uptrend again, but definitely the previous uptrend is over. So now we are looking at a few critical levels. First is whether 629 can hold. Right. Second is if it can come back to test 646. If it can't, then a downtrend is on its way, especially if we were to break below 620. Okay, so 646, 620 is very critical for this counter. Right, if we move in either direction, then you know what's going to happen to Kappa Corp. Okay, so I hope that this has been a fulfilling video for you. Hope that you learned something and reminded you of something that is very crucial for you to do every day when you are holding a counter or while you're waiting to enter a counter. Alright, so with that, I will see you next week. And if you like this video, please click the like button, subscribe the channel, and then forward to your friend as well. Thank you very much. See you next week.